I think reasonable expectations for the ECB is to cut another 2 times, bring a level there. And especially in that situation where fiscal is likely to become a stimulus again. Switzerland is in a different situation. It's essentially moving rates according to the movement in exchange rate. Our view is that the Swissy is more likely to depreciate in that kind of environment, so there's less pressure for the Swiss bank to cut. They might cut, but because SNB for any reason like to surprise the market, but they should not.
Is the ECB going to get to a stage at some point where they had no more room left to cut, simply because, I mean, all the spending, which is a great thing, it's been long overdue and very pent up in Europe, right, is finally starting to happen. It's not going to happen overnight. It's going to play it over a number of years, right? It has to, and that means it's going to have to be paid for somehow, which is going to increase debt, which is inevitably going to increase yields. What happens then, and how much can the ECB offset that?
Yeah, sure. But if we talk about increasing debt, well, one thing that I like to remind people is if you take the extreme, so the US versus Germany, so the average fiscal deficit in the US since GFC is roughly -7. Same in Germany is -1. If you look at debt levels, started at the same level, US is above 120, Germany is slightly below 60. So when we talk about fiscal unsustainability or fiscal path unsustainable, I think it's more on the US side than on the Europe side. And regarding the ECB room, again, I mean, if you add more fiscal pressures, then it means that the ECB doesn't really have to do more. I mean, the accommodative path will actually come through the fiscal side instead of
monetary side.
Right. What are currencies? What are foreign exchange rates telling you about the cycle that we're in? September the 22nd. I know you like talking about this. 50 years from the 1985 Plaza Accord. Could it happen again, or is this turn in the dollar got some legs to it, or are we going to see a Mar-a-Lago Accord in the second half of the year with another attempt to devalue the dollar?
Sure. So, well, if you look at the facts, 85, the dollar on the trade-related basis overvalued 25%. Today, pretty much the same level. So you could actually argue, well, that's the right time to do this. The thing is, the partners are completely different. So back then it was Japan, UK, France, Germany. This time it's China. And China has absolutely no intention to actually go down that road because they saw what happened to Japan. So this is an accord that will never take place in my view.
Speaking of China, again, is China back? And does it look as if this is a leadership that has the capacity to underwrite 5% GDP for 2025?
Yeah, I think it definitely has. So we were at 5. We expect 5 this year. Last year, driven by exports. This year, in my view, largely to be driven by domestic demand and essentially consumption. There's more and more which is done on supporting consumption growth in China, both on the cycle and on the structural basis. So the short answer to your question is yes, China is definitely back.